Hi, everyone. It's Jonathan with the Mon Valley Initiative Housing Counselor. It's our second Homebuyer Club of 2024. It's Thursday, March the 21st. And I'm delighted tonight we have what I hope to be a great guest. I know it's going to be a great guest, Jennifer Quattrone. And Jennifer is from Fairway Independent Mortgage. And I met Jennifer several years ago when she was with Howard Hanna. And at the time, she was able to send me some clients that were closing through the Howard Hanna program. And one of the things that always stood out when Jennifer sent me a deal is how professional she was. And she sent me the documents that I needed quickly and made my job just so easy to do. So when I think you're building a team of people around you, I think sometimes it's not the best interest rate. Sometimes it's not the lowest closing cost. Sometimes I think it is dealing with someone who is there for you and responds quickly. And I know that to be Jennifer Quattrone. So Jennifer, thanks so much for coming this evening to share with everyone some of your insights about the market. And specifically, we want to talk about a program that even today you send me people that need counseling, the PHFA K-FIT program. So welcome.
Sure. Yeah, it's one of my favorite programs. It's always great to see a first-time home buyer be able to get into a house. They can afford the payment. Maybe they just don't have all that cash saved up. They don't have a grandma that has a big gift for them. So this K-FIT program, the Keystone Home Loan with the K-FIT, is very affordable. So it doesn't make your interest rate go up. In fact, it's still below market value for the interest rate. And you can use 5% of the sales price can be put towards your down payment and closing cost. So it reduces how much money you have to bring to closing. In fact, it can be as little of as $1,000 of your own money out of pocket. So, and everyone like shakes their head, but I actually closed one 2 months ago, and the client came to closing and actually got a check back for $650, which is what she spent on her home inspection back. So she really only had $1,000 hand money into the deal, and everything else she spent, she received back as a refund. And she closed on a house, her and her mom, and their first house, and so exciting and wonderful. But it works for everyone. It does have a household income limit on it, so we always have to look at that and talk to you about who's going to be living in the house. Every adult has to disclose their income. And when I say it's still very doable, like, don't ever think like, oh, I probably make too much money. And you may make too much money, but for instance, one or two members, and that's one or two members, so it could be you and a child, would be two, and it's 102,600. That's the income limit for that program.
Pretty generous numbers,
Right,
not 50,000, not 40,000, pretty generous.
it is pretty generous. And then if it's three or more, it goes to, and this is in Allegheny County, 117,900. So yeah, you can see like these numbers are very generous. And so it fits a lot of people, and it's nothing to be, I mean, that 117,900, that's a nice income. And you still qualify for this program. And you can use it in many different ways. So right now in this market, seller assist is sometimes hard to come by. So if you are making an offer, FHA, they may not be willing to give you seller assist, or at least the full 6% seller assist. So we can use this to bring down your closing costs. So even if you have some money saved up and it's for your house, you still may want to use this program to reduce those cash to close. Like, at least look at what the payment is. Like I said, Right now, the interest rate on this is 6%. And if you were doing a standard FHA loan, it's probably going to be around 7%. So even with the closing cost assistance program, it's still below market value on the interest rate. So it's very affordable. And like I said, it's just a great program. It
Well,
just
let's talk
allows.
a little bit about PHFA and what it is, and try to
Mhm.
educate people a little bit about what it is. I have a flyer, but to anyone out there, PHFA is the Pennsylvania Housing Finance Agency. It is our state agency whose mission is to help people with um, home ownership or apartments. Mon Valley Initiative, we sometimes get money from PHFA to help us with building apartments. So our Clareton Inn that we just did in Clareton, PHFA was a participant in that to help us get that underway. So, but the home ownership division, I think is the one most people think of. I like PHFA, Jennifer. I mean, not everything's great, but it's a state agency. We know, right, when someone does this loan with you, Jennifer, what do we know? We know it's going to go to Harrisburg. We know the servicing is going to be located within our state, so that people that we talk with are going to be from Pennsylvania or residing in Pennsylvania. Um, as you mentioned, interest rates are pretty attractive, more attractive than market rate. And I didn't really realize it was that significant.
Right.
To go from 6% to 7% is pretty amazing.
Right. And if you wanted to do a PHFA loan without the closing cost assistance, right now, the interest rate on FHA is 5.25. It's just unbelievable. Yeah, I mean, it's the way to go. And they are subsidizing and lowering those interest rates so people can buy houses. You do have to be a first-time home buyer in many cases. They do have programs that you do not need to be a first-time home buyer, but in most cases, to take advantage of the low interest rates, you do need to be a first-time home buyer.
Yeah.
But PHFA, it's great. They have a great online, you can pay your bill online. One of the things that I love about PHFA is there's still a place that you can call and actually talk to a real person. So, not always like maybe go through and, hit buttons, but very often you get a live person on the phone. And so that's always, I like that. PHFA is a little quirky sometimes. They want what they want for conditions. So sometimes you feel like you have to jump through hoops a little bit more with them. But in the long run, it's definitely worth it.
And I think,
So
Jennifer, sometimes what people don't think about is the long-term relationship. And one of the things I share with my clients is, life happens to people and marriages break up and health issues happen. And I've always found that PHFA, if a company can have a heart, I think PHFA does a good job of working with homeowners to try to resolve problems. And I don't always feel that sometimes through other servicing companies, but I think PHFA does try to help people. And we've seen that recently with COVID, and we're seeing it now with some of the struggles in the economy with job loss. But I think PHFA does their best to help people. And sometimes staying in the home's not the right answer. But I think they do a good job of trying to make those transitions uh, smoother and less damaging maybe than other places where I don't feel like they want to help people. So that's the long 30-year relationship side of it that many people forget about.
right. And I completely agree with you on that. And I always tell people that at closing, like, if you find yourself in any way falling behind,
Yeah.
um,
Call.
be quick about it
Yeah.
and reach out to
Call.
PHFA because they are there to work with you and figure out the best solution for you.
Yeah.
They, I was thinking of something else I wanted to say while you were talking. Um, they have all kind of different programs to help, and let's just talk about the home buyer education. It's important. Like, I always feel like people come away with so much more out of that than what they think they're going to get going into it. A lot of times they feel like, oh, I have to do this. But then I get the phone call after the fact, and and they say to me, wow, he had a lot of good information for me. Like, that's good to know. Like, it's just the whole program is set up so that you can get into a home that you can afford. It's not pushing your limits, and that you will be comfortable in. And be able to make those payments and stay in the house. I often tell people, that's what's important. Like, you don't want to necessarily always overbuy. This could be your first house, and then you can move up from there once you have equity and establish some things.
Let's talk a little bit about the nuts and bolts that we see here on the flyer.
Okay.
That can cover. One of the things I like about PHFA is it's a 12-month-a-year program. It's always available.
Right.
There's
They don't
no,
run out of money like
that's right.
USDA.
There's not a lottery. It doesn't run out. You're not chasing something only to find out that it's out of funds. It's a 12-month-a-year program, so we can count on it. We can count on it being available when you're ready to buy your home. So that's one of the things I like about PHFA. So the K-Fit, you mentioned 5% of the purchase price. So in real terms, Jennifer, I mean, you're helping people every day, and I think one of the great things that you're going to bring to the session today is your experience being part of the deal. I'm not in there. You're talking to realtors, you're talking to listing agents, you're talking to all parties about what you can do. So, they'll lend 5% of the purchase price. What do you think it costs the buyer in a big number? What does it cost for someone to purchase a home on, say, an FHA minimum down loan? What can they expect if they were going to pay all the costs themselves? What would you tell a client that they can expect that they're going to pay roughly?
So closing costs are usually about 5% of the sale. Like, so if you were buying a $200,000 house, you can expect like around $10,000 in closing cost.
Okay.
And then you have that 3.5% down. So that's another, 7,000. So you're looking at, 17. It can go up to much as 20%.
Yeah.
Or $20,000 to buy a house if you did no seller assist and no closing cost assistance.
And I think that matches up to what I share with people, Jennifer. I say 10%. It's 10% is the puzzle that we have to figure out. So what's great about PHFA is they take care of the first 5%.
Right. Yeah, and as far as getting deals accepted, like, so with this program, you can do a 3% down conventional, or you can do a 3.5% down FHA. So sometimes when we know you're going in and you're competing with other offers, as much as I try to educate people that conventional is not better than FHA, there's still a stigma out there. And so there's many sellers, listing agents that feel like if they have multiple offers, that they're going to take the conventional loan over the FHA loan. So knowing that, I have good relationship with most agents in the area. I've been around for a long time. 25 years now, probably 25 plus. So there's many agents that I know and I've worked with that will talk to me and be like, okay, this house is not going to work as an FHA. Like, I'm not going to get this offer accepted if we go FHA. So then we play with it and we see like what we can do to switch it to conventional and make it still work with a low down payment. Like I said, there's a 3% down conventional product that we can still use the 5% closing cost. And you can still negotiate 3% seller assist. But the important thing is that conversation with you and the agent because the agent will know what's going on with that property. So you may go into a property, there's no other offers. We can be a little bit more flexible with how you may present your offer. You may be going into a house that has 5 offers on it, because that very much so happens in this market. And so you need to make the strongest offer. And so maybe you don't do any seller assist, and maybe you do the closing cost assistance and the conventional loan with 3% down. And you come up with $5,000-$10,000 to close, but we get you in there. So those are the things that we look at on a case-by-case basis. So when I pre-approve you, without any of these programs, but we add them as we need to, and we restructure everything as we need to do this. So
You were touching on there a point that I want to make sure we don't overlook, and that is the difference in seller contributions between an FHA and a conventional. Can you share a little bit about that? How
Sure.
the subtle difference between the two?
Sure. So FHA was really set up for first-time home buyers. Let's be honest. People still think it's only a first-time home buyer program, but it's not. It's open to everybody. But it's so it's 3.5% down, and you can get up to 6% of the sales price in closing cost assistant or seller assist from the buyer. That's what you can negotiate with the seller. So in and itself, without even the closing cost assistance, you can really bring down your cash to close. Now, that seller assist can only go towards closing costs and prepaids. It cannot go towards your down payment. Unlike the closing cost assistance program through FHA, it can be closing costs, prepaids, and down payment. But so it's 6% on FHA, and on conventional with 3 or 5% down, it's capped at 3% of the sales price. So you get less seller assist with a conventional loan that you can negotiate in there. So that's why it's very important to use the closing cost assistance program with a conventional loan to reduce your cash to close.
So in theory, for anyone out there watching, if we say you need 10% to get into the home, if PHFA brings 5% and the seller brings 5 or 6%, that could cover most of your money into the deal. And there are some minimums that need to be met. On the conventional loan, PHFA would bring 5%. The seller can bring 3%. So that's going to leave about 2% that you would have to handle from savings or tax refund, or maybe is a gift eligible for that, Jennifer? Would that work for something?
Yes, you can use a gift. You just need $1,000 of your own money, but the rest can be gift.
First cash in is going to be 1,000 from the buyer. So that's kind of the subtle differences, is that FHA is a little more lenient as far as allowing the seller to contribute, where conventional is not. So good. So 5%. It is a second mortgage, for anyone out there. It is a recorded second mortgage. Don't let that scare you. It basically says that you borrowed this 5%. So on that $200,000 home, you borrowed $10,000, and you're signing an additional note. You're signing an additional agreement, and basically the note says that you don't have to make any payments as long as you're living in the home. Is that right, Jennifer? Is that your understanding?
That is correct, and then it is forgiven 10% a year and fully forgiven over 10 years. So what that means is, so if you receive a $10,000 closing cost with this K-Fit, and in 5 years you decide, okay, we're ready to move, it's okay, but you're going to pay half of that back. So when you get your payoff for the first mortgage, they're also going to include $5,000 in that second mortgage. And so it is forgiven 10% a year. It's not prorated. So if you close in the 11th month of the 4th year, then you're still gonna pay 6 years of those the loan back. It's a little funny thing, but it is forgiven 10% a year. So every anniversary of the house, it'll be forgiven 10%.
Yeah. So you can move, you can sell your home. They're not holding you there for 10 years. And then if you do stay in the home on the 121st month, you basically are free. You're free from any obligation. That note basically self-destructs because you've been in there past the 10-year mark, and you don't owe them any money. So that's a fantastic feature.
And keep in mind, like, don't let that scare you, even if you think like, oh, I probably won't be in this house for 10 years, because sometimes people know that like we're going to get transferred with a job or, something like that. But you don't have to be scared about that, because although it may not be all forgiven, your house is going to appreciate over time also. So there's a good chance that you still won't owe money when you sell that house 5 years from now. Right now, houses are appreciating very quickly and a lot of money. So we always used 4% a year, and I think we're up right now to like 8 or 9% a year is what we're really averaging in the area.
Look at some of these details. So you must meet qualifying requirements of a PHFA loan. So that's just good credit, ability to repay, home appraises, and you have the cash to make the deal work. Would you agree there, Jennifer?
Yes.
And it says the minimum credit score is 660. So that's worth spending a little time on. So when you're working with people, where do you see mortgage credit open up, Jennifer? What's the normal kind of credit score there at Fairway Independent?
So we'll do a mortgage all the way down to 580. PHFA does require a minimum 620 for their regular standard loans, and then they do require the 660 for this closing cost assistance programs across the board.
So with PHFA, you're eligible at 620, but the assistance, the help comes in at 660.
60. And that's why I always say it's so a couple notes about this. First of all, most people follow like one of the apps. Credit Karma, we'll say. Not that I'm picking on Credit Karma. Credit Karma is not a true credit score. Okay, just so you know, it's an algorithm that guesses what your credit score is. It looks at different things and it sort of estimates your credit score. So that's not, in stone. I have seen where I've pulled credit and the credit score is either higher or lower than what Credit Karma is saying. The other thing is the apps that you use online are reflective of credit card models. So those credit scores are like how you're going to pay back your credit cards. So when a mortgage company pulls your credit, they look at it a little bit different, and your score could be different than what you're seeing. Because that often happens. I'll pull someone's credit and it'll be 620 and they'll be like, well, no, I don't know what happened because on my app it says it's 670. It just might be looking at it a little bit different. So we have to look at that. So I always say, get pre-approved early, talk to someone early, get that credit report. I can guide you on ways to fix your credit. Jonathan can guide you on ways to fix your credit. We can get your credit score up to a 660 or above, and then get you into, the closing cost assistance program, if that's important to you. I know I have ways to look at it and figure out what you need to do to get your credit score up. And I'm sure Jonathan has the same things at his disposal.
Let me go back to something you mentioned because I'm always trying to learn. You mentioned you can do loans at 580. You mentioned PHFA's at 620, so it's not really germane to PHFA. When you think of 580, have you seen any go through, and what is your experience with that? What makes a 580 credit score work in your opinion?
So we always say there's two different types of 580s. So there's the 580 that they had bad credit in the past, maybe in college, they opened up a few credit cards that they shouldn't have, or they got off track. But now they're back on track and they're working their way up. And they're at 580, 590, and you can tell that everything that's been pulling their credit down has been past or maybe medical. Okay. And those people work. Those people, we run it through the automated underwriting system and they work. Like if they have some reserves, that helps them. That means extra money after they close in their bank account. That'll work. Do I love to do those? Probably not. I like to put people into houses they can afford and will be able to afford for 30 years, not, well, let them go in there and see them fail. I prefer to work with somebody and get them on a credit plan to increase their credit score and then get them into something more like what can be offered with the 660 credit score.
So when someone's 580 and they're very thin on savings, does that usually work?
No, probably not.
Just to good. And at 580, all the closing costs are going to fall towards you, right? There's no PHFA. You may be able to get seller assist, but more of that cash to go into the deal is going to need to come from your pocket. So good. Thanks for sharing that. I think that's an important point. This one talks about maximum financing on PHFA. So share a little bit. What does that mean, Jennifer?
So what it means is, so sometimes I have somebody and they'll be like, oh, I want to put money down on this loan, but use the closing cost assistance program. Well, you can't do that. Like if you have extra money to put down on the house, then PHFA is going to keep those funds for somebody that actually needs those funds. That's the whole purpose of the PHFA, is to help people that need help. So you do have to use maximum financing. So that means 3.5% down on an FHA. It means 0 down on a VA, 0 down on a USDA, and you can actually put 5% down on a conventional. Like they do offer the 3%, but they consider 5% down on maximum financing.
And there's another test that's not on this flyer, but bears mentioning is they have the asset test. Do you have any information about that?
Sure. If you have $50,000 in liquid assets, so not a retirement account, but liquid assets, then you're not eligible for the KFIT.
Yeah. So if you have substantial savings in a savings account or checking, would that include CDs, Jennifer?
Yes, okay. CDs would be, CDs would be liquid.
I would think so. Okay. But IRAs, 401ks would not be calculated in that. So
you're allowed to have a retirement plan.
That's right. There is a need. The program is meant to help people in need. So there is a kind of a needs test. So homebuyer education. So I think under KFIT, everyone's required to do some sort of counseling.
Yes.
Credit scores over 680, they can do it online. Is that right?
That is correct.
So for those better credit score people, they can do that in their pajamas on their computer. I've never seen what that looks like, Jennifer. Have you ever seen the PHFA's counseling online?
That's what I wanted to mention is you'd be much better suited to call Jonathan and take it with him. The online, I get a lot of questions on it. Like they have to take it and it seems to take them longer. It seems to be a little bit more, I'm not sure. I almost want to say they even have to take a test at the end of it and pass it.
So you're saying I don't have a test, so you're saying that's better?
Yes.
Yeah. I'm not a huge fan of online because they're just going to feed you what the slides show you, right? And that none of that is customized to your specific situation. So if you're going to closing, none of it's customized to maybe questions that you have. And I don't know that there's a resource available to ask questions through the online. So You know, I've always felt that in person is probably I'm biased, the better way to do that. So I'm glad you mentioned that, Jennifer. So
Yeah.
that's,
Yeah, I
um,
try to steer people away from the online and try to steer them to the in-person.
we appreciate that. Mon Valley Initiative
Yeah.
appreciates that. So, good. Um, I wanted to go into a little bit where I think, you may be able to share with the people out there, some strategies that maybe you've seen that work. How can someone, you mentioned competitive offers. What can people do maybe with their realtor, to maybe try to be more successful with an offer or a bid? Are you seeing anything that seems to work better than something else?
Right. So, a couple things so Fairway offers where we'll underwrite your file up front. So we collect all the documents up front and we'll underwrite it. Um, that way I can call the listing agent and say, listen, we've already underwritten. We know we are positive about this income. We're positive about their assets and their credit. We're good to go. So that's that can make your offer more competitive. I do call every listing agent when I have somebody pre-approved um, to tell them, just feed them a little bit of the story, how qualified you are, how I will, get this to close. So that's one of the great things. Using the KFIT product so that you don't have to ask for seller assist um, that's a very strong point because especially in homes that are like in that price range, like 200 and under, that are most likely going to be first-time home buyers with limited assets. Like you're not alone. You know, most people in that price range are going to have very similar stories where they have good first jobs, good second jobs, um, but they just don't have a lot of cash to close. So if you can go in without asking for the seller assist, um, that makes your offer all that stronger. If we can make it a conventional loan instead of an FHA or USDA, that could make your loan, your mortgage stronger, your offer stronger. And working with an agent, it's really important. So maybe you don't look at those houses that are just coming on the market. It's hard because there's not a lot of inventory, but that house that's been sitting for a little bit and maybe a little bit over your price range, maybe you can go in and make a lower offer on it. Like they may have overpriced it. If it's sitting there, don't just assume that there's something wrong, like with a home inspection. Your agent will know, but I have seen where that has worked for many people, where they are able to get into a house and make an offer and maybe be a little bit more negotiable if it's been sitting there. And when I say that, like, really, to be honest with you, if it's been sitting there for a month in this market, it's crazy. But like that's a house that you could probably negotiate with. So like if you're having trouble getting your offer accepted, you might need to like explore those other options. The other thing is PHFA also has a really nice like a purchase improvement. So maybe there's a house selling that has a terrible bathroom in it. Well, maybe the purchase improvement program will work for you where you could take 15, 35, $30,000, fix something in the house and make it what you want and then close on it. So
Jennifer, there at Fairway, have you ever done FHA with energy efficient improvements like furnaces and air conditioners?
I have not actually done one of those. I do know that they are offered and we can do those. I
Okay.
have just never have done one, but yeah, that's a great point. Like we do offer those.
Yeah. And timing with PHFA. I've heard some pushback that it takes longer. What's your thoughts on that? When you're putting in an offer, did you have any
Mhm.
insight on something like that?
So sometimes what happens is PHFA gets into, we had just had this had, in December, this was happening, where they were taking over. So I think they were on 14 business days to review a file. Um, so what that means for us is we just need to get it there quicker. Um, you know, and give them the time to look at it. I review PHFA every day to see what date they're on, to see if any of our files need to go in quicker. Um, as soon as I do the loan, I know once we have the appraisal, that's when it can be sent to PHFA. There's other things that you need, but usually the appraisal is the last thing that we need. Once we have the appraisal, we can submit to PHFA. So I'm pretty good at judging that. PHFA did improve their system also, where they are reviewing files. And if they have files that do not have everything that you need in them, they send them back. So you don't have a lot of like garbage files clogging up the system.
Mhm.
So like right now, they are running on they're running on a 3-day, 3 business day turnaround right now, which is very good. So we're not having that. Yes, when we get into like June, July, that may happen and it may be pushed back. You just want to work with your listing agent and your lender and to make sure what the time frame is on that. We will have listing agents that'll say that they don't want to accept a PHFA offer. To be honest with you, I don't always disclose that we're going through PHFA. That might not be fair to the listing agent, but it's really not any of their business. If I'm going to commit to a closing date, and when I look at it, I will commit to a closing date and I will make that closing date. That's all they need to know.
For anyone out there listening, and Jennifer brings up something that she's not saying it directly, but I'll say it directly. The reason why December and June and July slow down is because people need to take holiday. They need to take vacations, and people go away from their desks. And the mortgage business is kind of strange in that when people leave, there's not reinforcements to come in and to pick up the work. So if you're buying a home in December, or if you're buying a home in the summer, you have to anticipate that maybe the person you're dealing with might go on vacation, and they deserve to go on vacation. So that can be the slowdown in those periods. So, but that 3-day timetable sounds really good. And the other thing I would recommend to people is when you have a mortgage loan officer like Jennifer, and she's telling you she's getting ready to send it in, always ask that question. Jennifer, is there anything else that will make this file better by us putting it in there? Before we send it, is there anything else that would make this better, or anything else that we need to get into that file before? It's better to take that extra day up front or 2 days up front rather than to send it in, get it sent back, and then have to scramble at that time. So it's great when you have someone like Jennifer that's reachable, who knows what's going on, to be able to have those conversations, to make it better for yourself. Quite honestly, is you can help be part of the process to make this successful. So that's great. We're running close on time. I had a couple questions that people
Okay,
sent in, and I just wanted to know if you could handle a couple of these. So
sure.
someone said, how long of a process once initially signed up? So how long, help people with maybe timeframes from maybe signing an offer all the way to having a closing. What are you sharing with people right now?
Oh, sure. So, so as far as the pre-approval process is concerned, you give the information, you submit your documents. Typically, you can get a pre-approval in a day or so unless I have questions. And then that pre-approval is good for 120 days. That's how long your credit's good for. And then once you're under agreement, the typical closing right now is 30 days. 45 days is a long closing. And sometimes I see them go to 60 days very infrequently. So the time frame usually is 45 days is probably standard. 30 is, becoming more typical.
I think that 60-day one, that's when people don't know where their funds for closing are coming from. They're trying to save, they're chasing money to try to make the deal work. So that goes towards, we want people to be strong financially when they go in. We know that they know where the money's coming from to pay for this. Saving during processing is not usually a good answer, is it, Jennifer?
No, it's usually not. And I do like when we do the pre-approval to prepare people for that. Like, okay, I'm very transparent. I usually give a cost sheet right from the beginning. It's guessing on what property taxes and insurance is going to be, but like, I like you guys to have a number that you're striving for and that you need in there. Lately, I don't know why, but I keep needing to say, you cannot use cash to buy a house. So, and so everyone's like, well, that's okay. I'll just put it in the bank. You have to source all large deposits, so be careful with that. You need to get that money into the bank, not a large deposit, and it needs to be in there. So any cash that you have sitting around that's going to need to be deposited should be done at least 60 days before you're going to even start the process of buying a house.
There's another question, Jennifer, that came in. It says, in order to shop for houses, do I have to be pre-qualified? That's what realtors are saying. What's your input on that?
Yeah, so a real estate agent's not going to want to take you around and show you a house if you haven't completed your pre-approval. It's just not a good policy. Like, is there a steadfast rule? No, but they don't get paid to do that. So for them to take you to see 10 houses and then you talk to somebody and then you find out you cannot be pre-approved, it's just not good business. And sellers don't typically want people coming through their house that aren't qualified. Um, you can go look at open houses, but to really seriously look for a house, you should get pre-approved, pre-qualified. And I'm a big advocate of do it early because maybe there's a medical bill that's going to show up on your credit report that you were not even aware of. Like, let's get these things fixed and get you into the right program. So I'm a huge advocate on early, and I'm a huge advocate on people are probably not going to show you houses until you're pre-approved.
Yeah, they are commission employees, and you don't drive people around that haven't been vetted to be able to afford the home. So
Right.
I think they're doing a disservice to you if they're driving you around. Quite
Yeah.
honestly, it is.
And the other thing that can happen with that, me and an agent just had a conversation about that, is you go look at that $180,000 house and you like it, then you go get pre-approved, find out you can only afford 150. Now everything in 150 doesn't really compare to that 180 house that you fell in love with. So that, it's really important to know where you stand before you start looking for a house.
Good point. So, Jennifer, if someone wanted to reach out to you, what's the best way to contact you?
Yeah, so usually the best way is my cell phone, which is 724-825-1450.
Grant, are there any other questions that we got during this time?
Could you speak a little bit to the income limits for the program? Someone in the chat asked about specifically for a one-person household. I know you mentioned a little bit about it, but if you could
Sure.
give some exact examples.
So, in Allegheny County, a 1 or 2 person household, the income limit is 102,600. And if you're over that, you may also, they have another program that's the same, has a K-Fit, but it's called K-Flex, and it allows your income to be 196,200. The interest rate, it's the same program, the interest rate's just a little bit higher. But 1 or 2 member family household is Allegheny County 102,600. Let me see here. I'm just looking. Beaver is 102,600. Westmoreland County is 102,600. Washington is 123,100.
Targeted county. Yeah, and to anyone out there, I mean, the PHFA website, this is all available. It's a little cumbersome. If you need help with that, you can either call myself or maybe open a dialogue with Jennifer to begin looking at what might work for you. So I think it's a great program. I think it is after credit, cash is the next obstacle, and I think it does a great job. And actually, PHFA was kind of cutting edge to come out with this program, several years ago. So, we applaud them for putting something interesting out there for people. Long before COVID, they had this program in effect. Jennifer, once again, can you share your phone number just to make sure that everyone out there can get it?
Sure. It's Jennifer Quattrone. I'm with Fairway Independent Mortgage, and it's 724-825-1450.
Thank you. Thank you so much. To anyone out there, we're going to be having another Homebuyer Club number 3 sometime in early May. Jennifer, on behalf of Mon Valley Initiative, thank you so much for sharing your evening and your knowledge with the people that are interested in. Again, I find you to be a model of what a good loan officer, a good mortgage person is. So thank you for joining us. We're happy to have you. Anyone, if you have questions for myself or Jennifer, please reach out in the coming days, and we'll be happy to help you with what you're thinking about.
Okay.
Thank you, everyone.
Thank you. Have a great day.